Welcome back. Reliance Industries. Let's get to the analysis on the big giant. Came out with numbers, of course, after market hours on Friday. We have a whole panel of experts joining in. The numbers are fairly steady. Fourth quarter performance quite all right across all the key segments. The revenues was up about 9%, driven by strong growth in digital services, and retail recovered rather well. To discuss this, we have Gaurav Malhotra, Executive Director, Axis Capital, joining in. He tracks the telecom space. We have Karan Taurani joining in to size up retail operations and how Q4 was for Reliance. And, of course, we have Probal Sen, who tracks the energy space at ICICI Securities, joining in. And, of course, Karan is from Elara. And we have Prakash Diwan right here as well to discuss Reliance and other stocks. Gentlemen, good morning and good Monday to all of you. Let me first start with telecom, Gaurav, because that's where I think the quibble is that, yes, ARPU has gone up. I think it's gone up to 206, but maybe the street had a little more in mind. But overall, how would you look at it, and what's the sustainable expectation now that the first round of tariff hikes is behind us? What are you penciling in from Reliance's telecom business this year?
Yeah, hi, good morning, everyone. So, see, in terms of ARPU is actually slightly ahead of our estimates. Do note that this is a quarter in which there are 2 less days. So, even if on a like-to-like basis, the ARPU would have sort of dipped, say, 2%, give or take, and the ARPU is up like 1.5%. So, from that perspective, the ARPU has actually moved up, right? And it has moved up on the back of 2 reasons. One is that there has been some residual tariff hike benefit, and secondly, there seems to be increasing data consumption, which is also helping, the company from an ARPU uplift perspective. Now, in terms of how do we sort of think about ARPU moving ahead? See, end of the day, there will be more hikes, right? So we are expecting a hike somewhere in the next 1.5 to 2 years from the last hike. So the last hike happened in June of last year. So roughly say December 25 to say June 26 is when we expect a hike, and on a compounded basis, we expect that the ARPU of say Jio should probably increase by 8 to 9% over the next say three years, and they will also be benefit of subscriber addition. So on the whole, we do expect a healthy top line growth for Jio in the coming 2 years.
All right. Hi, Gaurav, and gentlemen, thanks a lot for joining in. Gaurav, since we're talking about the ARPU and the telecom sector, the segment for Reliance, are you factoring in the IPO sometime during this year? And what kind of value are you ascribing to this part of their business?
Yeah, so it's difficult to give timelines on IPO. We don't have much information, right? The only thing we know is that a fundraise with external investors has happened in 2020. So it's been 5 years since that. So difficult to give a time on the IPO perspective. In terms of the valuation, see, from an EV perspective, our EV is roughly around $125 billion for Jio, which is roughly valuing it at like 13 times March 27 EBITDA multiple. This is roughly in line with what we ascribe to Bharti India.
Okay, all right. Got that point, Gaurav. Thanks for that. Let me come to Probal to size up the energy business. Probal, good to have you on the panel this morning. We'll talk oil and gas, E&P, all of that. But what was interesting that I noted was that brokers now have started ascribing value to the new energy business. I think I read a Motilal note. I think they're factoring in about 75 rupees from this piece. But you tell us, how did things fare? E&P was a little below estimates on volumes, KGD6 volumes, like we said. But what was your takeaway, and how much value are you giving to new energy right now?
Yeah, to answer your last question first, new energy, I think people have been valuing at a multiple of capital employed. I think what will probably change is as visibility continues to emerge in terms of the timelines of completion of some of these plants. All of us will probably start to sort of build in specific tangible numbers coming through from the segment. So the valuations will probably see a rejig up or down. We don't know at this point of time. But as far as we are concerned, we are valuing it at about 1.5 times the initial capital investment that was announced of 750 billion rupees, which transfers to, I think, something like 50 to 60 rupees a share. So that's something that is there in our SOP. That's one. As far as the first part of your question in terms of how the energy business performed, I think in terms of KG-V6 performance, yes, probably the production was a bit lower than expectations. But to be fair, the management had already, always maintained that these were not exactly new fields. These were essentially satellite fields These were standard fields that they had basically developed to, sort of increase production from KG. So they were always going to have a relatively lower shelf life in terms of a peak period as well as a plateau period. So some decline, I think, was to be expected. If I look at the commentary that was made, I think they are looking to sort of stem this decline to the extent that they can. How successful they are, I think, is only going to be seen over the next couple of years. But, obviously, I don't think that they realistically upstream can actually see any huge growth in the near to medium term. I think the O2C segment business is where I think the attention needs to be probably there, given the kind of uncertainty that we're seeing, in terms of the global margin environment. The management themselves were very clear to point out that petrochemical margins are near a decade lows across certain key commodities. And I think that is something that remains a bit of a worry. That from this base, while there is capacity expansion now that is there on the anvil by FY28, that should sort of commission and start to contribute. From a margin perspective, I think that remains a key monitorable. When do we actually see any recovery, both in the refining and petchem part of the O2C business? I think that is something that remains a bit of a worry for us.
And what's the timeline of recovery that you're factoring in, Probal, given where oil prices are and, where demand seems to be?
I really think that from a demand perspective, I think refining is not doing that badly. Petchem, there is a little bit still of oversupply. So, I would expect recovery probably in refining slightly ahead of what happens to petrochemical. But just to be specific to Reliance, I think what they have done well is they continue to sort of diversify and, be flexible between the kind of several multiple inputs that they use in the petrochemical business. As you know, they have a substantial amount of ethane-based capacity. They have an ROGC-based capacity, and then they have internal naphtha-based capacity. So, beg your pardon. If they are already trying to source much more ethane for the expanded capacity that they will have on stream. And I think even within the existing part, the ethane pricing benefit is something that has actually kept them afloat. If you look at some of the trends that were there in margins, the fact that Reliance has still managed to deliver 150 billion in EBITDA, I think it's a function of the fact that they have a diversified and a very flexible sourcing mix, rather than any huge change that has happened in pricing per se. So I think that will probably continue.
Okay, all right. Let's address the other part then. Karan Taurani as well is with us. Hi, Karan. Always good to see you in. Let's hear your thoughts then. The retail part of the business was a bit of a worry. But in the past quarter, that seems to have grown quite well, and it's laid a solid foundation for growth in FY26 as well. What was your reading in terms of the performance in the past quarter, and what are you penciling in terms of a path ahead?
Hi, Nigel. Good morning. I think if you look at the retail business, I think the performance was slightly disappointing, majorly on two counts. I think this is in line with expectations as well, largely. Reliance, as you know, is a large conglomerate. They operate more than about 19,000 stores. They have been kind of rationalizing their store growth. If you look at the net store addition this quarter around, it was extremely low. If you look at the last 7 to 8 quarters trend, the net store addition has been kind of coming off. So this could be, concerns relating to the digital businesses. So if you look at the grocery business, we have seen disruption that side because of quick commerce. If you look at the beauty personal care category, even that is moving very aggressively, towards the online segment. So I think putting these things into perspective, they would have kind of, curtailed the stores. Every segment is seeing increased competitive intensity. The apparel category, the fast fashion segment, all these segments are seeing increased competitive intensity. And maybe that's why they're trying to rejig their portfolio, curtail the stores. And this may be a near-term thing, right? I mean, it's going on in the last 4 to 6 quarters. But the big question mark is, how long does this last for? Is it for another 4 quarters, 6 quarters, 8 quarters? What exactly are the plans in terms of store rationalization? Because unless the stores don't move up in terms of growth, you will basically not see, the overall growth coming back for Reliance Retail. So if you look at Reliance Retail as a portfolio, overall growth was in the range of 15 to 18%, which has now come to almost about 3 to 4%. So I think store growth is very important to come back, and how they kind of execute that, what are the plans there, that's a very big monitorable. Second monitorable is around the digital businesses, right? So I mean, all these businesses, whether you call it electronics, the FMCG, beauty, personal care, because of quick commerce, e-commerce, there's a lot of disruption there, and there is extremely high growth on the digital part. Offline is kind of struggling because of footfalls, and also because of increased competitive intensity between D2C brands and many players coming in the market today. So I think how Reliance executes their digital business plans, that's also one very big monitorable, because if you look at the contribution in terms of digital businesses for Reliance Retail as a company, it's been range of 17 to 18% for the last 8-10 quarters. So no doubt, I mean, the contribution has remained stagnant, but it's not grown, beyond the point. So they have to really scale up digital businesses, which will come on the back of better execution, maybe better assortment, or, they're trying to rejig their strategy, doing JioMart 30-minute delivery. They're trying to launch Shein as well. So how they execute these online businesses is going to be a key monitor in terms of how growth pans out for Reliance Retail as well, apart from store expansion coming back on track.
Okay. All right, gentlemen, thank you very much for a very comprehensive 360-degree perspective on Reliance, all of its businesses. Very, very helpful this morning. Thank you for weighing in. So now